Let's take a look at how the markets are performing on this Monday afternoon. The rand continues the storm, the green adding to gains at the end of the previous week as yield-seeking investors made tentative bets on the volatile currency, this amid risk aversion elsewhere in emerging markets. But for an in-depth update on the latest global market sentiments, we speak to Jimmy Moyaha, who's market analyst at AxiTrader. Good to have you with us this afternoon, Mr. Moyaha. If you could take us through how the markets are performing in intraday trade today.
Good afternoon, Thami, and to the listeners. Markets are quite mixed at the moment. As you rightly said, the rand is strengthening against the dollar. On the upside, the SA40 is up about 1%. We have seen a bit of risk off from global markets perspective. What's interesting enough is on the emerging market front, the rand, along with other currencies like the Turkish lira, are outperforming expectations at the moment. So that is quite positive on our front. But overall, I mean, it's just an interesting start to 2021, sorry, just in view of all of the events of 2020 that have taken place.
Now, let's look at state-owned defense company Denel. They made a 1.96 billion rand loss in the year to end. If you could give us a bit of an idea and perhaps take us through their figures. This was the year-end March of 2020. What are their figures looking like now?
So what's interestingly enough around that is Denel had cited that there was a decrease in sales. There was also some poor program execution and poor program management and some inefficient cost structures here and there that led to that loss. But over and above that, what I find particularly concerning about Denel's position is that the Auditor General's office has issued, as part of the audit report, a disclaimer of opinion, an emphasis of matter, and additional reporting responsibilities, which in accounting terms simply means that the Auditor General has cited that they have insufficient evidence to prepare audited financial statements in line with the way they should be prepared, and at this stage they are not issuing audited financial statements. So that's quite concerning around that in terms of what's happening there, why that's happening. We know, of course, that they did mention, though, as part of that report, is that Denel, according to the Companies Act definition of financially distressed, Denel is not financially distressed at this stage, but they've just cited that they have insufficient evidence to provide an opinion and to prepare audited financials at this stage.
Now, DRD Gold, they released their trading statement today, and the group says that they expect to report earnings per share of between 106.2 cents and 115.8 cents per share. If you could take us through that.
Of course. So DRD, if you'll remember, is a subsidiary of Sibanye Holdings, and we have seen, I mean, we spoke about this sort of towards the end of 2020, is that all gold manufacturers and all gold mining stocks did have a very good run towards the end of the year. But in particular, DRD's got two sort of companies under them. They've got Ergo and Far West, and off the back of the news that they announced today, the DRD stock was trading as high as about 4.5% in early morning trade. Sibanye was also up about 1% just on the back of that announcement. But I mean, if you look at it quite practically and quite simply, revenue rose about 860 million rand, which was largely off the back of the increase in the gold price over the year. I mean, from January of 2020 to December of 2020, gold was up almost 20%. And that's, I mean, from 1500 to about 1800, just shy of 1900. It did peak even at $2,000 per ounce. And coupled with that, we also saw that the rand dollar price, the rand dollar exchange, also increased by about 20% in favor of the dollar, which, I mean, gold is priced in dollars. So what you saw there was an 800 million rand increase in revenue, and that came off of just a 1% or so increase in sales. So the budgeted figures that they went into 2020 with were definitely helped by the COVID situation and the uncertainty, and fueled by the dramatic increase in the gold price. And as a result, they're able to report much better results. Just to note, their operational costs were up also marginally. On the west side, they were largely down by 5%. But like I said, the overall DRD reported very positive revenue figures, and that's probably what's led to them being able to pay out such an increase in HEPS.
Now, Jimmy, the seasonally adjusted Absa Purchasing Managers Index, the PMI, it edged up slightly to 50.9 index points in January, and this is from 50.3 in December. How much of an impact has load shedding had on this, and perhaps also the lack of export activity and South Africa's return to level 3 lockdown restrictions? How have all of these various factors impacted the productivity in the sector?
Well, I mean, of course, if you look at the sectors that are largely there, a lot of them are manufacturing organizations. And yes, while the PMI is positive, while we have had some increase in manufacturing output month on month, it's important to note that this is also coming off the back of a period in time where there was no manufacturing production being allowed at all. And coupled with that, I mean, an increase in manufacturing production is only as good as your ability to sell it. We've seen glass bottle manufacturers, for example, have complained that they've increased their outputs. They cannot stop outputs. They cannot turn their machinery off because it's too costly to do so. And yet they're not selling. So an increase in production is always good. It usually is sort of a precursor to a positive increase in GDP, but that needs to be coupled with the sales, that needs to be coupled with the exports, that needs to be coupled with those other factors that are going to actually result in that return. Otherwise, what we have is just an increase in production, but no revenue from that production. So you're just increasing the stockpiles that we have, but we're not getting rid of it. So in as much as the PMI is slightly positive at this stage, it's not really factoring into an overall growth or an overall recovery just because of the lockdown factors, the load shedding factors, and the other factors that we did touch on. I mean, if we look at the overall performance of our economy, I mean, we estimate that over 2020, the economy contracted by about 7%, if not more. And I mean, that's just the figures that we're able to reliably measure at this stage. So it is critical to just be cognizant of the fact that while the manufacturing output is a good thing for us, and an increase in that is always good for the economy, we need to do something with what has been produced. We need to sell that. We need to get rid of that, and we need to actually generate revenue from that.
Jimmy, thank you so much. It makes a lot of sense. One really has to consider the entire value chain in order to see whether or not there has been a true progress holistically. That's Jimmy Moyaha there, and he's market analyst at AxiTrader.